All right, so welcome to today's show. What is going on in the market? So let's break it down, not financial advice. So, what is happening right now where we see Bitcoin going up, Microstrategy going up, and we see the markets actually crashing? We know this is an impact from the tariffs that are actually going on and retaliation of other countries coming in and going, we're going to hit back on all the tariffs that the US is now imposing on other countries. But it's very interesting to see what's happening with that data. Number two, we're going to talk about today. The fact that the 10 years are down from 4.7% interest rate to about 3.92 or 3.9% interest rates that are being paid out. What does that actually mean for the economy right now? And is that signaling recession? And what does that mean of what the Fed's going to do coming up? We're also going to talk about the Fed because the Fed has a plan to do one interest rate cut. But I also know that what I saw in some articles today that the Fed may only do one interest rate cut this year, coming in June potentially, but it also may do potentially more interest rate cuts, and we could have 4 interest rate cuts leading up over the next year. Interest rate cuts, what does that actually mean for the economy? All right, got some people over here in the chat box. Hello, leave some comments. Let me know what you think. So that's the news of what's going on. If you look at the last week, and we take a look at the NASDAQ and we look at the S&P, it is signifying a bear market for the stock market. And so you're looking at a 10% drop over this week in the S&P approximately, and the NASDAQ about the same. The last big drops in these two have come over the last 2 days. So when you look at the S&P yesterday, it dropped about 4% and change, and today about 4% and change. So these are big drops over the last couple days. But when we look at Bitcoin and we look at strategy, Bitcoin is up from yesterday's close by about 1.6%, and strategy is up about 3% or so since yesterday's close. So we're seeing, while the markets are dropping, we're seeing that strategy and Bitcoin are actually holding. And we thought that when April 2nd was going to come, the big number was like the base is 82,000. If Bitcoin and strategy hold at 82,000, that's a really good support level. If Bitcoin holds at 82,000, that's a really good support level. And we've been seeing it hold at 82,000 and bouncing off it to 84, 85, $86,000. So that's a good sign. And strategy, which we know is likely to go down faster than Bitcoin, we've seen strategy hold this week, closing at about 293 today. So there's some big changes going on right now in the marketplace. And I want to give a little bit of a recap here on just what has strategy done, Microstrategy, I like to call them, still old habits. What have they done over the last year or so, and 2 years and 3 years, to see the growth of this company if we look at the statistics of what's actually happened with them, okay? And it's fascinating to look because if you look at the end of 2023, strategy had 130,000 Bitcoin at the end of 2023, and it was valued at $5.5 billion. Now, they paid an average price at that time at $29,000 for their Bitcoin. At the end of 2024, strategy had 252,000 Bitcoin, okay, and for about $15 billion. And now strategy has 528,000 Bitcoin. So the average price has been $66,000. Now, I think these end of 2024 numbers are a little bit off, but present day, we know strategy owns 530,000 approximately Bitcoin for a valuation of $35 billion. Now, when you go back and you look at strategy's company a couple years back, we're talking about a company that was valued at $3.5 billion. They're now valued in terms of 10x that in terms of just their Bitcoin holdings. And if you look at the valuation that people are giving to strategy right now in terms of the company, the valuation they're giving is around $75-80 billion in terms of valuation. So there's a massive growth in terms of strategy's Bitcoin accumulation from 2023, 2024, and now as of April 2025, and also a massive growth in the valuation of strategy as a stock, or as a company, I should say. Michael Saylor recently posted a bomb on Twitter. He said there are no tariffs on Bitcoin. So for those of us who are worried about the tariffs, which is pretty much the entire population right now, we've been waiting for this news. We've been waiting for April 2nd to see what Trump's going to do. But sailors reinforcing with conviction, there are no tariffs on Bitcoin, to put the solidness and the certainty there in the marketplace to say, hey, Bitcoin is the stable thing. Bitcoin is what we should be betting on into 2025 and 2026, not financial advice, but Bitcoin is the stable thing. And he keeps putting it there and he keeps putting it there. Now, what's the significance of the 10-year Treasury yield going down to 3.9% from 4.8% earlier? All right, now I'm going to sketch this out because I think this is an important component to understand. So I want to walk you through just the Treasury and what that actually means for money circulating into the economy and what that may mean for Bitcoin and strategy when the Fed actually cuts rates, which we definitely know a rate cut is coming. And I think there's more rate cuts that are coming. And many of the analysts and reporters on this feel the same. So this is actually good news for Bitcoin and good news for strategy as well. So let's take a look. Yeah, and that's right. Moonwalker says it looks like it might be decoupling from the market. It's true. Like typically you see the market and you see strategy, Bitcoin kind of moving together, but it looks like people are moving more into Bitcoin, or there's more confidence and optimism for Bitcoin and strategy than there is for the markets right now, meaning the returns aren't moving in tandem. The stock market's going down while Bitcoin and strategy are going up. Could this be a sign of what's to come in the future? And we've seen many disasters before, like the FTX collapse, right? And Bitcoin still rebounded after that. We've seen this happen with COVID when Bitcoin crashed all the way down when the announcement of COVID first happened. And then it shot up to $68,000 in that bull run. So we've seen these types of drops before, and we've seen these types of recoveries. We also know that there's good news coming to the table with some countries are deciding, hey, Trump, maybe we should have free trade. And we're seeing some countries being like, hey, this makes sense. Let's do some free trade. All right. So that's a good sign and good indicators that Trump kind of forcing the hand of other countries. Some countries are coming to the table and they're saying, okay, let's do this thing. Let's even the playing field. We also know that China did not feel the same. China whipped back with 34% tariffs in the marketplace. But at the end of the day, like what China's doing is going to be bad for them. Long term, this is going to be good for the United States. The economies are going to get stronger. And Trump's putting out the news saying, hey, I'm going to stick to what I'm saying. And at the end of the day, you should be investing in America. And America is going to be strong and wealthy and great again. And if America's strong and wealthy and great again, then eventually the markets will be great again. But the good news for Bitcoin and strategy is it looks like Bitcoin and strategy are moving away from the markets. Now, why would this be? I'm going to sketch this out and take a look at why this might actually be, okay? So I'm going to go over here and share with you a little whiteboard here so we can get into some sketching, okay? So here is the basic. If I can get in here to the damn whiteboard. All right, so here's the basic idea as I'm figuring this out, right? So the basic idea that we're looking at here in the marketplace is the fact that you have the treasuries. I'm just going to explain this because this thing's not coming up. So you have the treasuries, right? And the flow of money right now, where the U.S. is deciding that the 10-year Treasury yield just dropped. So it's been lowering over the last week, and it went from 4.7 down to 3.9% and change. All right. So what that basically means is money's moving out of the markets right now, and as money moves out of the markets, more money is trying to flow into safe investments. So when people get freaked out in the markets, they start taking their money out and selling, and they move to cash. Not financial advice, not what I'm doing, right? Not what I'm doing because I'm in Bitcoin and Microstrategy. So a lot of the money in the markets right now is freaking out. Let's put money into cash. So they're moving into cash and they're looking for safe places to put their money. And so the treasuries, the 10-year treasuries, which the yield or the interest rate that they pay was 4.7, has now dropped down to 3.9%. And so because you have money flowing out of the markets and it wants to go into safe money, the government that offers up these treasuries, because the government basically says, loan me money and I will pay you an interest rate. And so when you loan the government money before, the interest rate was 4.7%. Now, if you loan the government money, the interest rate's about 3.9%. So yes, good for the US government. Yes. Why? Because they get to pay out a lower interest rate. So if the US government gets to pay out a lower interest rate on money that's being loaned to them, that's good because that's excess money that the US government has. They don't need to pay it out to the investors investing in these treasuries. They get to pay out a lower interest rate to the investors. So it's more free cash flow for the US government, right? So in terms of the 10-year, the only thing that really means in relation to us is that more money's flowing into these actual instruments because people are afraid. They're like, I'm going to put my money in safer investments. However, what if, and this is my theory on it and the indication, what if the safe money that's moving out of the markets right now, because we see Bitcoin and strategy holding, and the safe money is moving out of the markets, and people are looking at treasuries and they're like, I'm going to get 3.9%. Like, why am I going to put my money into treasuries? How about I start putting my money into some Bitcoin? How about for people who are riskier, obviously, how about I start putting my money in strategy? So could it be that fear in the markets, money flowing out, safe haven is putting it into treasuries and bonds and things like that. But so let's just look at the 10-year treasury yield. Safe money, let's put it into here. Safe money, a lot is going there. So when a lot of safe money goes there, the government knows the demand is up for these bonds. And so the government can pay a lower interest rate because the safe money is coming in and they're like, we're going to put more money into treasuries. There's more demand for these treasuries. So the government can lower the interest rate, meaning the government goes, we'll pay you less interest. Win for the government, but loss for investors because they got to go to safe investments, get out of the market, not getting returns in the market. And it's not a good sentiment for the economy because it looks like, oh, recession. But what if some of this money that was going to flow into safe money is now going into Bitcoin? Could that be? Now, with this idea that money's moving out of the markets, what does that have to do with the Federal Reserve and the interest rate cuts that are coming? That is a different story. That is not necessarily tied to what's happening with the 10-year treasury yield. So when you see the talk of the 10-year treasury yield and the drop of those interest rates, that is not necessarily tied to the Fed and the Fed cutting of interest rates. So what would cause the Fed to cut interest rates? Well, people are crapping their pants, right? Money's moving out of the stock market. Not good. And we know that when interest rates are high and there's less money in circulation because there's less money that can be borrowed because the interest rates are high, there's less money that people have in their pocket now because businesses can't borrow money. Interest rates are higher for mortgages. There's less money flowing in the economy because I can't get loans at a good rate now. So there's less money flowing into the economy. So if the Federal Reserve looks at this and goes, uh-oh, recession coming, bad news, right? Not a lot of money to go into the stock market because people don't have free money to invest. Not a lot of money for businesses to invest to grow. Then what happens? The Fed decides to cut the interest rates and cut the interest rate and cut the interest rates, which we saw what happened in COVID when the interest rates dropped. And so they dropped the interest rates. More people are able to get access to money at lower interest rates, which means more people borrow money, lower interest rates, and that money goes back into investments, back into stocks, and it boosts the economy. So we are looking for a Fed cut, and then we think one's coming in June. So if you're kind of sitting here and you're like, okay, April, my God, we should be mooning on Bitcoin at this point. Absolutely, right? We're all in agreement with that. But we know that the tariffs has shaken the markets, period. That's it. End of story. Whether you think it's a good thing or a bad thing, it's completely shaken the markets. I think it's personally a good thing. I like what Trump's doing. I think he's evening the playing field. So now we're looking and we're going, okay, we're coming up to this line now. The Fed is going to cut interest rates. They're going to cut interest rates. And they're going to cut them, this is my prediction, more aggressively. So they'll cut them in June, it looks like, prediction, okay? But it looks like they're going to be cutting them all through 2025 and 2026. So we're going to have additional rate cuts coming sooner than we thought. Additional rate cuts, good. Interest rates lower. Businesses borrow money to go back into the economy and invest. Consumers borrow money. There's more free cash flow because the interest rates have gone down on things, which means you keep more money in your pocket rather than paying higher interest rates for your houses, higher interest rates for your cars, higher interest rates for your loans, higher interest rates for everything, more free cash flow, money into investments. Hey, got some free dough in my pocket. I should put in the stock market. Eventually, the stock market rebounds. But in the meantime, I think we're seeing a shift where people are going to be like, safe money. Why am I going to start putting my money into these bonds or putting my money into these treasuries? And Lord knows nobody wants to lock their money up in these 10-year Treasury yields because it's 10 years the government's holding your money for. That's what it means. So you put the money in, and for 10 years, you're putting your money in a 10-year Treasury. Make sense? So you're loaning your money to the government, and it's in a product that's there for 10 years. That's how it works, okay? So this is what we see is happening in the marketplace. And it's pretty fascinating, and it's pretty interesting to see what's taking place. So what's going to happen in the future? I think the safe money that's flowing out of the stock market is money that's going to go into Bitcoin. I think Bitcoin has shown that it has been resilient during this time. We had lots of fear that we're going to move down to 50,000 or 60,000 on Bitcoin. We're not seeing that response now. Could things change next week? Possibly. But I think the resilience of seeing strategy and Bitcoin holding their own is a pretty interesting situation to be in right now for what we're actually seeing in the marketplace. So this is pretty cool, right? And that's the game. You know, whether we think that the Fed, the true inflation rates are that inflation is high right now, and the Fed is trying to get inflation down below. I shared in a report yesterday that true inflation thinks that the actual inflation rate is 1.4%, not in the high 2% like the Fed thinks. So depending on what you're going by, we all know that the inflation rates are manipulated anyway by the Fed. Okay, so that's pretty much the game of what's happening in the marketplace right now. You know, and that's the news in terms of what's happening with the tariffs. You know, China did just hit us back with 34%, but the U.S. we import more money into Chinese goods into the U.S. than we export. So there's a certain amount that gets imported every year from the China to U.S. and obviously we're going to be taxing those. And there's a certain amount that gets exported from the U.S. to China, which is imports for them, and we're going to be taxing those. We're at about a 3x differentiation, meaning we import 3 times the amount of goods from China than they import from us. So there's a little bit of an imbalance there in terms of the quantity of dollars of what we import. And certainly by hitting them with tariffs, that's going to be more revenue for the U.S. government, meaning we're collecting more tax on goods that are coming in here. Now, unfortunately, the people importing the goods, which are like the companies importing goods from China, they're going to pay the tax. They're going to pay the import tax on it. And then that tax that they pay then gets passed on where the U.S. government collects revenue, but it also gets passed on to the consumer. So for the consumer, some of these goods could be more expensive for people in the United States. But in the long term, the U.S. is going to continue to build companies in the United States, which is good for the economy of the United States, which is good for jobs in the United States. And Trump is literally trying to level the playing field. I think with India, the import taxes that we were paying with them was something around the neighborhood of 58% or something. So all Trump was saying was really simple. He's like, dude, like we just want to cut it in half. Like we're paying 50 something percent. Let's cut it in half to like 28%. So he's not even taking the full measure of like, we're going to hit you back with a 50 something percent tariff on our end. He's just saying, let's cut it in half and do it at 28%. That's fair. That's fair. There's nothing wrong with that. I think with Vietnamese goods, the import taxes were as high as 90%. Of what we were getting taxed on that. So, you know, Vietnam's coming to the table, Argentina's coming to the table now, and we're starting to get free trade from other nations. There is talk that there's unions that are being formed by other countries, and they're going to put a union together, and they're going to fight back and retaliate against the U.S. But at the end of the day, the U.S. is going to win on this. It's not just because I'm an American. At the end of the day, the U.S. is going to win on this. Trump's going to win. It's just going to happen, and he's going to win by putting in fair trade practices. All right. And we're going to be better for it globally, worldwide, because there's going to be fair trade policies put in place. And at the end of the day, that's going to strengthen the economies here in the United States. It's going to strengthen the markets. And this is a temporary glitch right now, I think, over the next couple months that we're going to see. And I'm thinking that when the Fed cuts the rates in June, we're going to moon. So that's my prediction. What do you guys think? Put it in the chat box. Moon says, with all this stuff going on, I see a cut before June 2025. Wouldn't that be amazing? Wouldn't that be amazing if the Fed just announced a cut before June 2025? I hope so. I mean, it's pretty clear that the markets are crapping their pants, right? It's pretty clear. It's pretty clear that money is moving into safe money and that the economy is going to stop spending. So if you were smart and you were the Fed and you wanted to stimulate spending and you wanted to stimulate investment back in the stock market, you would start making some rate cuts soon. So I hope it comes before June. But hey, maybe we got a correction going on in the stock market. It's resetting. And we know times in the past where this has happened. Normally it bounces back and boom. So what do you think? We got Mark saying, yeah, portfolios are bleeding, right? But Bitcoin's up for the day, which is interesting. All right. The Big East band says Trump is corrupt. Understood. We got only MicroStrategy blew up on the NASDAQ. Yeah, MSTR is up on the NASDAQ. That is correct. And Peter says strategy to the moon. I'm with you, man. I'm with you. So put it in the comment box. What do you think is going to happen to the markets? I think this is good news that Bitcoin and strategy are holding, and I am holding on, and just like you, being patient for things to correct. Obviously, we got a lot of uncertainty going on right now in the marketplace, but hopefully that's good for Bitcoin. Hopefully that's good for strategy, and if it's good for Bitcoin, we know it's good for strategy. So I hope you guys have a great weekend, and I will see you on the other side. But the markets are going down and Bitcoin's going up. We're seeing a change take place. See you soon.